Module 1 that really helps you work through some of the issues in the divorce is going to start with income. Income is probably the most important piece of the financial picture that most people are going to have in any situation. The income is going to be important to both spouses, and getting W-2 wage statements or payroll statements and documents such as that, W-2s and tax returns, is going to be the first step in understanding really what is the income and expenses. You'd be surprised at how many people have not seen their tax returns or have not signed their tax returns in the past because one of their spouses has always just handled that. This is going to be the time where you're probably going to have to go back and take a look or talk to your accountant and ask for some of the prior tax returns if you haven't looked at them. They could also be located in your home office or the office of your spouse. And so a conversation even about estate planning and getting everything in the right area is going to be a good first start. If the person isn't really willing to take you to the accountant or the financial advisor for their normal meeting, which could be every year, once a year, every 6 months, then that could be an issue that you want to address. But the reality is you first have to understand what income is coming in to you and your spouse, and what does that mean for maintenance and alimony. Maintenance and alimony are the same term, if you will, or mean the same thing. It basically means when one person is going to pay an amount to the other person. For right now, that is not a taxable event. So you're going to receive your income, you're going to pay taxes, and then after that, you're going to pay an amount to your spouse. And we're going to call it maintenance or alimony. Typically in mediation, you can negotiate that for a certain length of time. So how many years do you want to negotiate it? And what are the terms? Okay. So it doesn't mean that maintenance and alimony is always available. There are state rules per each state of how you get maintenance or alimony. How does it get paid out? Sometimes there's a calculator or a calculation. All states have resources for you to determine and read, what are the reasons that somebody is going to be able to receive maintenance, and how do they need to prove that out? And then what are going to be the reasons that the court would make somebody pay maintenance? So again, every state is going to have certain rules or requirements that you have to look at for that particular situation. Child support is typically an amount that is calculated also on either a state calculator or in some capacity, typically by the attorneys. Financial professionals will fill out the calculation and could also back into the number to determine like what would be like an even amount. But typically the courts are not going to try to even up the income 50-50. They're going to look at some other type of uneven split in order to balance it in some capacity. Sometimes if people are making both under $100,000, there may not be any maintenance or alimony, but there could always be child support if there are children involved. Even when negotiating, typically you can't waive or negotiate away child support. It could be something that you could come back and fight in court later. Again, maintenance, alimony, and child support have legal constructs. It means that there's really legal reasons of how they get paid, even though they seem like they're money things. So these are things that you would want to talk to an attorney about or get some legal advice on, because again, the court's going to have, and the state is going to have some reasonings like, does the court normally get you to a 30, 35, or 40% of the after-tax cash flow going to the out spouse? That's a lot to say, right? But basically that's saying that, if somebody makes $1,000 a month, then the court might only try to make sure they give away 300 of it or 400 of it a month, right? They're not going to even it out totally. And then they're also going to look at child support in the calculation. So if you can't get a hold of some of the tax returns, one thing you start looking at is your bank statement. For the most part, you can go onto your online banking, log in, and download the past 18 months of statements into PDF. And then if you have the capability to also download all of the transactions that are available into a CVS or an Excel file, that is going to be golden information for you in the future. And I would download it now, because maybe it might take you 6 to 12 months to figure out if you're going to move forward in a divorce or if you're planning ahead. But download those documents now. The same go for credit card statements, mortgage statements, recent utility bills. You really have to go get all those recent bills and statements. The other things that are going to be important is year-end statements. So for retirement accounts, security accounts, investment accounts, brokerage accounts, where you have stocks, bonds, and things like that, the year-end statement, so that means 12/31 of whatever year, December, is going to be a statement that's going to basically say what happened the whole year. And so that's going to give you an entire year look. And what you're looking for is ins and outs, things that came in and out, or things that you may not be aware of. A lot of times, if you have somebody that is really moderating the money, you're not going to have access to some of this information, but you need to start looking around. You need to start looking in the trash can. Are there bills coming from, certain utilities? Do you see other utility bills that you didn't know you had property at? A lot of other income things could be bonuses or stock appreciation rights. A lot of times people have future compensation packages. So you have to figure out, does the court understand that? Or are they going to allow you to have some future benefit when you are already divorced? Retirement plans and pension plans are another area that have some complexity. Retirement plans are typically, everybody wants to look at them on an after-tax basis. So that's going to be kind of your Roth IRAs, right? Is typically reported as an after-tax basis. But the other stuff is going to be pre-tax. So it's not the right comparison. So again, get some of this information, start to understand where some of the statements are, and pull it together. Another area is going to be on the house. So if you can pull together a mortgage statement, it's going to have a lot of information on there that's going to be beneficial for you to figure out if you can refinance this home, who's on the deed, who's on the mortgage, and can it be transferred? The other thing is, can you afford it? And if you don't know what your income is and you don't know what the possible maintenance or alimony is, which again, if you work with a mediator, specifically a financial mediator, you should be able to go through some of these areas and understand and say, what is the state's requirement? How much, if this person makes $200,000, how much am I going to receive? And then based on that, what's going to be my expenses? Am I going to rent? Am I going to refinance? Am I going to stay in this house? Is somebody going to help me pay for this house during this time period? How long is it going to be before the kids graduate? These types of things are very important. So if you start pulling together all of the documents, you can have a better idea of whether you can even do them or not. And you don't want to negotiate around concepts that you actually are not feasible. So that's going to be your first step, understanding the income, how it's going to be split between the two people, and child support. And then we can move into how you would separate the assets.